Over 27,000 bitcoins just left derivative exchanges. Historically, big outflows like this been followed by sharp corrections. Does it mean that Bitcoin is about to crash towards $44,000 now? Let's analyze. Hello ladies and gentlemen, this is Salmon from Market to Paradise. In the previous video that I have recorded for you for free 1 day ago, I have told you that we will start moving towards this resistance. As you can see, we have done exactly that. We have pumped by around 3%. With Paradise Only VIPs, we have transferred this little move into some profit on this short-term trade. And after that, in the same video, I have also told you that we will be going down after touching this resistance. And as you can see, that's already happening as well. And the question is, are we about to continue to go to the downside right now, or is this a place where we will start pumping a little bit to the upside and have some confusing price action that will misdirect a lot of traders before the real move? Let's analyze, and we will start by taking a look at the comments that I have gotten under the previous video, where I have told you the insider information that with the Paradise team we have catched a Bitcoin whale that just moved $70 million into Binance. And there was some comments saying that $70 million in the market that has 10 to 20 billion dollars volume per day is just a small drop in the sea, and asking why would $70 million sell cause price to cascade. And we will exactly go through this right now. I absolutely agree with these comments, by the way. It's a right question to ask, because $70 million isn't that big of an amount, is it? It is my mistake because I have not went through the exact reasoning behind this claim. So in this video I want to explain to you, first of all, that with the Paradise team we have been able in the on-chain analysis catch this one Bitcoin whale, alright? But these whales usually they are working in groups and they are orchestrating all these big moves, right? Another thing that is important to understand is that even though you are a group that is having to its disposal $500 million or even $200 million, you can do big things. Why? Because sometimes even a small pressure can create a big damage. If you understand martial arts, for example, you know that sometimes it's enough to put just a little pressure at the right time to the right spot and you can create a big damage, right? And the same thing is happening with crypto market. If you have and understand how the futures market works, you know that if there is a buildup of liquidations, and right now we have below us $11 billion of accumulated long position liquidations, just if we crash towards $86,000, ladies and gentlemen. So if you have some money and you understand that when you create some pressure at the right time, at the right spot, right, you know that the futures market work the way that basically you just need to hit one liquidation level of some long position, right? And once this long position is hit, it automatically creates a short position after it's liquidated, right? And that creates pressure on the sell side. It will move the market a little bit, then it will hit another liquidation level that will again close the long position and automatically open a short position, and then basically you have this domino effect that is going further and further. If you at the same time can see that the order books right now are very thin and there are really not any major buy walls below us, and you understand that most of the order book volume is actually above us, you can pretty much determine from these indications that even with a small pressure, with small strike, with small push, you can create a big damage if you put the effort at the right time, at the right spot, right? So yes, $70 million is just a small drop in a big sea, but applied at the right time, in the right spot, it can be the final push towards helping the market to move in the direction it would move anyway. And really, that 10 to 11 billion dollars of liquidation leverage below us, it's not a small number, ladies and gentlemen. Right now we will be talking about how probable is it that we will be seeing a crash very soon in this market, and we will start by analyzing the ultra high time frame chart. So the ultra high time frame chart is a weekly time frame for us. Every single candle represents a weekly trading activity, ladies and gentlemen. This particular candle is closing in 1 day, 8 hours. If you have been around and subscribed in this channel, you remember that I am telling you since January 30, alright, that we will be crashing towards $44,000. There were two main levels, $77,000 and $44. In between, I told you that we will retest this structure previously supported support, now resistance. As you can see, everything happened perfectly. We have hit that $77,000 and right now we are retesting this structural resistance. Previously it was support in a higher degree B-wave formation. If you're on our website, you know exactly what I'm talking about. It's all available for you for free in our MCP for University. We want to make sure that you are getting better and better with us, so keep educating yourself. And right now we are in the B-wave and the question is when it's gonna finish and when we have the turnover towards $44,000. That's the question we will be answering in this video. Obviously everywhere on social media right now you see how everybody else is calling for a bull market. This is a new bull market, right? Buy. Nobody is talking about a reversal to the downside, right? At the same time, the same thing happening right here at the $109,000. We were probably the only ones that told you exactly at the top that we are going to go to the downside. And unlike Paradisers that believed us right away, and if you have been around in Paradise Family VIP, you have been profiting on this move with us heavily. Most of the other people started to believe us when? After the move, of course, right? Right after here, we already started to get messages like, okay, we are going to $44,000. When we gonna drop? Where is going to be the next drop? And they got scared exactly at their support. That's the same thing what's happening right now. There is a FOMO kicking in. Nobody is talking about the downside, but if you want to be long-term successful in the crypto market, you need to start developing this contrarian mindset, okay? Because very often what the herd does is not profitable, and really determining where is the herd, where is not the herd, where is the minority, what the minority is doing, what the minority is not doing, what the big players are doing is very hard, okay? That's why you need to have a deep understanding of the context of the market and also deep understanding of what's going on behind the scenes. With that, then you can be doing and creating much higher probability trades, and that basically equals long-term profitability and long-term consistent results. So right now what we are seeing in the market is that we are exactly at that resistance we have wanted Bitcoin to see at. We are finishing the B wave of our zigzag and we are about to have a reversal. What would decrease the probabilities is a weekly candle closure above $93,000, ladies and gentlemen. So if I will see a weekly candle closing about $93,000, that will a little bit decrease the probabilities of a reversal, but that again doesn't tell us that for sure this is invalidated and we are going to the moon right now. It's just decreasing the probabilities, and with the Paradise team we will be just adjusting our trading strategies from going probably a little bit less aggressive than we would normally do, adjusting our system, etc. Right now, however, it's important to understand that the probabilities on a weekly time frame are suggesting that the bears are gonna win this, and to increase our probabilities of this prediction we need to analyze the Bitcoin price action a little bit more deeply, okay? So let's zoom in inside of this price action. Let's take a look at what's going on a high time frame, ladies and gentlemen, and let's put our focus on this A wave, okay, that been created in an leading diagonal formation with an extended fifth, right? So basically, if you have been around, I've been updating you about every single wave after we have finished this ending diagonal with the truncated fifth. This was our first wave, this was the second wave, third wave, fourth wave, and then we finished fifth wave right here. And right now, as you can see, we are already in between of the first and second wave. So we are already with this zigzag formation in a deep correction, right? What I mean by a deep correction is exactly this. If we retest the end of the first wave, that's usually a retracement of more than 50% of the whole higher degree wave. And right now, as you can see, we are already above it slightly, right? The first wave top finished right here. We are right now in the middle of the first and second wave, ladies and gentlemen. So from the previous video you already know that the next target is the extension of this zigzag formation, and how we can actually predict where the C wave, the final C wave of that zigzag ABC will finish is by multiple indications. One of them is channeling, right? So let's do exactly that. So how we gonna do that? We will basically put a trend line from the bottom of the A wave, we will place it to the bottom of the B wave, we get some slope of the trend line, we copy that slope, right, and we put it to the top of the A wave right here exactly. And as you can see, we are already touching the uptrend trend line, right? So this is supposed to be the target or very close to the target. How we can get some confirmation if we are really about to start reversing to the downside very soon is to take a look, for example, at the volume, right? Does the volume suggest that we have enough power to continue to go to the upside upside, and like everybody else is saying that we will start a new uptrend. Do we have enough power for that? Like, does this movement suggest that this is gonna continue somewhere and create a new bull trend? Well, right now we can see a clear divergence, right, between the volume and the price action. The price action is making higher highs, the volume had made lower high. Another indication is, for example, RSI, and on the RSI we can see a clear divergence. As you can see, the price right here is making equal high. Right here from the 4th to the current price we have equal high. However, the indicator is making higher high. What does it mean? It means the momentum is there, right? Somebody is pushing the price to the upside, but the price is not having a higher high as the RSI is having. What does it mean? Well, it means that somebody is distributing and not allowing the price to go higher, and same like the oscillator make a higher high just yet, right? Together with that, we can take a look at stochastic RSI that's heavily in the overbought zone, already overextended there. Plus we are at resistance, we are finishing the C wave. So the same way as the ultra high time frame, also this high time frame chart, ladies and gentlemen, is suddenly bearish. Okay, let's right now zoom in a little bit inside of that C wave and understand a little bit more how soon and when this C wave is going to, with the highest probability, finish. So let's take a look at medium time frame and let's calculate the subwaves of the C wave. That will again help us to determine where with the highest probability we will finish this C wave and start reversing to the downside. Before we do so, let's analyze on this time frame also another important resistance under the top of the wave 1 and the bottom of wave 2 that we shouldn't go above to at all if this count is correct, and that is some Fibonacci retracement, right? Because you understand that if we go above the 50% mark deep correction, then there are some rules, some guidelines actually that can help us to determine where the price is gonna go next, and one of them is to analyze the Fibonacci sequence of the wave A, which is this one, right? Let me remove the indicators right now, the drawing, so we have a clear view of what's going on. So basically, if we go above that 50% mark, then we can start calculating and analyzing where is the next important resistance, right? And one of the most important resistances is the 0.618 Fibonacci retracement level that is sitting at around $96,000 to $97,000, ladies and gentlemen. That is often, with most of the probability at hand, the next level of that extended ABC zigzag reactionary wave in which we are right now trending, right? So the zigzag looks like this, and right now we are in this B wave. Very often, if it's extended, it actually doesn't go above that 618 Fibonacci retracement level if the count is correct, ladies and gentlemen. So right now we are very closely reaching this level. We have slightly touched it, alright, but we have not fully touched it just yet, and I will right now explain to you the reasoning why with high probability we will go a little bit higher and touch that resistance zone before going into a reversal. Also, what is happening on this medium time frame? Can we say it's bullish or is bearish right now? Well, we know that the channeling also has another rule, and that is that we should not retouch in the C wave the upper trend line more than 2 times, right? We already tested it almost 2 times. It wasn't exactly touching the trend line, but fairly enough, okay? We should not go above it. If we start going above it for a 3rd time, we probably gonna break it, reclaim it, and that will be bullish, okay? And that will be one of the invalidation together with that $93,000 weekly closure above that level. This will also be something that would be invalidating the bearish idea, and with the Paradise team, we are monitoring that very closely. However, right now, if we take a look at the oscillators, we are having a nice bearish divergence. As you can see, a higher high right here, but lower high on the RSI oscillator. Together with that, we are at an overbought zone, ladies and gentlemen. So this is kinda a textbook example of a bearish divergence, the classic one. As you can see, when the price is having a higher high, but the indicator is making lower high, it suggests that basically on the lower time frames, the momentum is already going down, is decreasing, and the bulls are getting getting weaker and weaker, and that is often the time when the bears start taking over. If we take a look at MACD oscillator, we can see that we don't have any divergence just yet, so I would like to see the small further push to the upside, not touching the trend line, okay, but slightly touching this resistance right here. That will push the histogram to a green number, however it will create a lower high and we will have another smaller higher high or equal high, and that will be another bearish divergence and a nice confirmation, and again that will increase the probabilities, right? That's basically how you can trade better, because then you adjust your trading strategy, your trading tactics, you either go more aggressive or defensive, really depends on your trading strategy. But all of these probabilities points, by analyzing the market and what's going on behind the scenes, etc., just giving you some points, and then you are moving on your probability point scale, right, from up or down, and based on that, after you are done with your analysis, you understand, okay, I'm sitting right here, this is the probability of the next move, I'm gonna invest in my trading idea this and this amount of money. Yeah, this is how professional trading works basically. So really, I want to see one more push higher on a low volume and low momentum, and that will be another bearish confirmation that will increase the probabilities. But let's calculate the subwaves. It will again increase the probabilities to determine where the C wave is going to finish. So let's zoom in inside of this price section. Let's take a look at low time frame right now, ladies and gentlemen, and I will just delete this chart in right here. As you can see, I will just zoom out a little bit so you can see the channel. So this was the channel of the whole ABC zigzag, right? Thanks to that, we have understood, all right, C wave is going to be finishing around this level. In the previous videos, you understand that we have been doing the channeling for this impulse that the C wave is moving inside of, right? And you know that the impulse consists out of 5 smaller waves, and we will be taking a look at it because we have an impulse inside of an impulse. Let me explain. This is the C wave, all right? This is the C wave, and the C wave subdivides itself into 5 smaller waves, all right? So for example, this was the first wave, this is the second wave, then we had the third wave, absolutely textbook overthrow about that channel in the third wave, that is always the most impulsive one. Then we had the fourth wave, and right now we are finishing the fifth wave, okay? And the fifth wave, because it's a wave that is a motive mode wave, all right, is also subdividing itself into 5 smaller waves. Usually it's impulse or an ending diagonal. In this case, I do believe it's an impulse, and let me zoom in a little bit. Let me take a look with you at that impulse perfectly so we can understand where with the highest probability the final fifth wave of the fifth will finish, all right? So right now this is the smaller fifth wave, and that is also subdividing itself into 5 smaller waves. So I have created a channel already because we have created enough waves for us to be able to understand where the upper trend line and the lower trend line is going to be and with what kind of slope, right? So I've created a line from the bottom of the first wave, put it to the bottom of the second wave. I have copied the slope and I have basically put the upper trend line to the top of the first wave. I have ignored this wick right now because we are on a 1 hour time frame, and right now the order books are very thin, so this should be ignored, and I have put the trend line to the bodies of the candles, okay? So then we have created third wave, another example of textbook overthrow above that channel in the third wave, because it's really the most impulsive ones, perfectly touched our resistance zone that I have analyzed for you in the previous video. Well, and right now we are finishing the fourth wave, okay? We will be talking about the fourth wave, about the pattern which we are forming right now, and we can see that we are doing something that is not very common, and that is that we are underthrowing in the fourth wave. And because we understand the guideline of alternation in the Elliott wave theory, if the fourth wave is having a throw under the channel, the fifth wave will most likely have a throw over, okay? So I do believe that very soon, once we are completed with this fourth wave, and we will be looking at that fourth wave in a minute, we will be starting a fifth wave, ladies and gentlemen. We will go back inside of that channel and we will have an overthrow, okay? And we will finish at the level I will be talking about in a minute, and then we will start going to the downside again. So would help us in understanding that right now with the highest probability we will have a final push to the upside. So firstly, it's the Elliott wave count, right? We have just created 4 waves, 4th right now in creation, right? The 5th can be truncated, so it doesn't need to go above the third wave, but I believe we might push above it. Why? Because of the throw under of the fourth wave, and because we understand the guideline of the alternation. Another reason is that above us there is some liquidation pool of short positions, of some over leveraged short positions waiting to be liquidated, ladies and gentlemen. So I do believe that before we start going to the downside, we will take these over leveraged short positions down. Why? Because the same thing why I believe more profitable for the market players is to push the price to the downside and create a domino effect, and it's basically why we want to, before we go to the downside, get rid of these short positions, is the probable fact that if we don't get rid of them, once we start moving to the downside, they will start taking profits, right? And once you close a short position, it will automatically open a long position, and basically the rush to the downside will not be that easy. So it's very clever for the market makers to get rid of these and then move the price down, okay? So what suggests that this is a high probability is not only this Elliott wave count, also we are creating a bullish divergence on this low time frame. As you can see, we are creating a high low, and on the indicator we are creating a lower low. This is a classic hidden bullish divergence, right? We are having it also on this MACD indicator, ladies and gentlemen. As you can see, the histogram is having the same thing, and right now the bears are already getting weaker and we are about to shift it into a bullish one. So I do believe that this move is supported by this as well. If we take a look where the fourth wave is going to be finished, we can actually see that the fourth wave is trending inside of contracting triangle, okay? And we are having this prolonged lateral correction that I've already pushed at you right here. Often this ends in between the first and second wave, okay? And it's prolonged, and either the E wave will finish right here at around $93,800 and then we will start going to the upside, or we can actually broke below this a little bit and retest this 0.618 Fibonacci retracement level that will move this trend line a little bit lower, and after that we will start to go to the upside from here. Low probability is that we will start breaking below this demand zone right now, so I'm really watching with the Paradise team the price action. Based on that we are creating our trading tactics and we are making money with Paradise Family VIPs. I will be updating you about the next movements in the next videos, ladies and gentlemen. You know that I'm recording for you every Tuesday, Thursday and Saturday, so if you completely didn't hate this video, smash the like button, subscribe, and I will see you on Tuesday. Cheers!